Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday. It's June 19th, 2012. Markets are rallying according to the news headlines based on the belief that the Fed's going to come out and say something about QE3 tomorrow on Wednesday. I find that to be hard to, just hard to fathom, and I'll tell you why. Same reason I told you before. Basically, we had the Fed meeting a few months back that came out and they said we see no reason to actually do QE3. The economy is doing what it's supposed to be doing. Then they came back a couple weeks ago and their analysis of the economy was basically it was flat and hadn't changed any. So if their previous viewpoint was no need for further QE3, and then we have basically the economy's not changed any, then of course they're not going to mention QE3. They have no reason to. So the fact that they're going to, some people out there pumping the idea that the Fed's going to come out tomorrow and say, oh, okay, now we need QE3, not likely. Again, you have already solved the issue with the Greece, at least temporarily, so you didn't have a major collapse there over the weekend. So again, there's no reason for QE3. What you do have, looking at the charts here and looking at all the charts that I look at, I find the same condition. If we go and we look at a high point, or in this case we'll look at this one here to show how extreme of a rally you could have and still be nothing more than a false rally. Here's as high as closed. Here's the pretty high ultimate oscillator high point there, and then here's this close here, which is much lower than the previous, so sloping down, yet we're already flirting with the levels we've seen before here. So what we're talking about here is if you get a rally, any move higher here is going to push the ultimate oscillator to a higher high here. However, it's not going to push price above this point here. That means you're going to keep this down slope, you're going to have an upslope then, and that's going to be another bear setup situation we talked about before. Remember this one back here? You had this little upward slope here, this little downward slope here. I told you this rally is false, unsustainable because of this signal here. What happened? It fell apart. Now you're just building a larger one. Would I be a buyer of this? Of course not. Would I expect the Fed to come out and issue QE3 or announce QE3 plans on tomorrow? Absolutely not. I have no reason for that either. What I would do is simply wait for this market to give you a sell sign. What you do with a divergence, just because you see a divergence doesn't mean you start shorting it. What you want to do is wait for a signal. Something like this, shooting star formation, then confirmation. We haven't seen that yet, not recently. So what we're going to do is we're going to sit there and continue to watch and wait for a shooting star and then confirmation. Once we got that, we start selling with a tight stop, and that's how this game will be played out. And this is true for any chart you look at in the U.S. Let's have a look now at the NASDAQ and show the same exact picture. You've got this high point here on the ultimate oscillator and higher high here on the ultimate oscillator, now in the overbought condition above the 70 line there. You can see that you are trending up by the ultimate oscillator. However, the corresponding time period, highest close point here, highest close here, you can see you're still trending down. And you've got plenty of room to move to the upside and never come anywhere near from changing that directional slope. So what we've seen here again is another bear setup, something like we talked about before, in this case here and here. We expect this rally to fail. It did. This situation here is going to fail. It will. The SPX or S&P 500 large cap index, you can see that you have this high close here, high point here on the ultimate oscillator, a lower close here, and a higher point here on the ultimate oscillator. Again, setting up this famous bear setup formation that we've already talked about in the past, and this we're seeing again. So would I be a buyer of this market? Absolutely not. The S&P 500, this is one of the major markets. This is not just a smaller piece like the Dow Jones or something like that. This is showing that again and again you look in the market, you are seeing this signal. The only place you do not have it formed yet, and I say yet because I believe you will form it, is on the Russell 2000 Small Cap Index. So let's have a look at that right quick. The Russell 2000 Small Cap Index, as you look at the high points here, the high close here and the highest high, the ultimate oscillator here, versus the lower close here and also the lower point here on the ultimate oscillator. At this point, we don't have the same condition or signal on the Russell 2000 Small Cap Index as we do the other three major U.S. market charts. However, this chart is the most bearish chart that we have. It's the one that had the head and shoulders formation that was formed and confirmed and reached its target and bounced off of that low. All that makes sense. However, this high point up here is still a major area of resistance. So just because you can move higher here doesn't mean that you've now turned this into a nice strong bullish condition. What you've actually done is sold off substantially. You're getting a bounce out of it. And before you decide that this is a great new bull market, remember there was a reason why this peak happened, and it had nothing to do with Greece. has to do with the fact that the markets overall have got major resistance there on longer term charts. We'll probably show you that again later this week. We pointed that out a couple weeks ago, but again, we'll cover it again in the future. Right now, I just want to bring to your attention, I would not be betting on the Fed. I would not be looking at Greece as being a problem solved. We're just simply back to where we were in the past, where we have austerity is not working over there, and the issues are growing bigger and bigger. Spanish debt yields are rising again. All those issues are still on the table, and they're still causing problems. And with Europe, when Europe goes lower, so does the U.S. That's just a reality of it. We also have the data coming out of China. We've seen earlier this week, we saw their real estate data was not strong, and that's another one of those telltale signs that their economy is also suffering. So when we're looking at the global markets and we're seeing these major peaks like major head and shoulders formations, they make sense. They're telling you that our economy is peaking. When the Fed comes out and says nothing's changed from our last reading to the current reading, we see the economy is flat. Then you're not getting signs that this QE3 or quantitative easing is actually doing anything other than driving up some stock prices. And the Fed's already come out and said, look, Congress is going to have to make the move here, not us. And so I wouldn't be betting on QE3 anytime soon. But if we do get a collapse out of Europe, I would expect some kind of move by the conglomerate of federal reserves out there, and to come out there and try to do something to soften the blows. But a reality out there is we have too much debt on the table. There's only one way to deal with debt, and that means people get some cuts, and that's just the reality of it. Until that stuff gets played out, we're in a really nasty market environment. It's going to keep getting worse. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, and I'll see you in the next video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.